corporations. Every large company that you're familiar with and most of the companies you do business with are corporations. And although only 20% of all businesses fall under this category, they make up upwards of 80% of all the sales in the country. The characteristics of a corporation mainly is that the corporation itself is a separate legal entity from its owners, meaning that in the eyes of the government, the corporation is a person separate from the people that own it, and the owners are called shareholders. Corporations can be public or private, private meaning that it's owned by a private group of people, and public meaning that it's publicly traded on the stock market. There are several advantages to the corporate structure. The main one is that it has limited liability. Remember that limited liability means that the owners can only lose what they've invested in the business. So if you were to buy shares of a company and that company were to go bankrupt, well, you would not personally go bankrupt. You would simply lose the money that you invested. The corporation also has an infinite life. Because it's a separate legal entity, it doesn't end when its owners die. It just keeps going forever and the shares just keep getting passed down to someone else. It's very easy to transfer ownership because you can sell shares, unlike a partnership where it's complicated to break apart. And it's much easier to raise capital. There are not too many disadvantages when it comes to corporations. The main ones are that it's more costly to set up. You need to, have more paperwork. You have to set up the corporation as its own legal entity. It typically costs more money as well. And the other one is double taxation. Double taxation is, again, related to the fact that the corporation is its own entity, meaning that it will pay its own income taxes on profits. So the business will earn profits and get taxed on that. And then when the owners take their share of the profit, they also get taxed at the personal level. So the income gets taxed twice, which is why we call it double taxation.